Welcome to another podcast of Master Investors Company. Glad to be here again with you. If you're new, please subscribe to the podcast, leave us a comment, and at the end, if you have a question, drop your question, leave us a message, and follow us on all platforms. Today's theme is going to be about what are assets and liabilities. The reason why it's so important to know the difference, because that is ultimately what makes the wealthier wealthier and the poor poorer. A lot of times the poor things an asset is a liability, and liability is an asset. They have it confused. So I want you to get this right from the start. When we're building wealth, we have to understand what a financial statement is. And when we learn what a financial statement is and how to read it, we can understand that there's an asset column, a liability column, there's an income column, and there's an expense column. And the whole purpose of reaching financial wealth, financial freedom, and creating wealth is by increasing the asset column with cash flow and assets that creates passive income, that creates cash flow, right? And there are three types of income in the money game. The first one is earned income, which is the income that the employee obtains when he goes to work in exchange time for money, or the self-employed person who has maybe an office, a lawyer, a dentist, or a doctor who has to see patients every day in order to make the money. They have to show up to work. That is called earned income. Then the next type of income that exists is portfolio income, which comes from commodities and paper assets, which is taxed at a higher bracket as well because they're capital gains, right? And so we're going to be focusing here on Master Investor and the third type of income, which is passive income, the income of the ultra wealthy. So it's very important for me to explain what an asset and a liability really is in simple terms. We're going to keep it as simple as possible because here at Master Investor, we create high quality financial education made simple to help you understand the concepts of rule of money and the business principles that work in all economies. So in simple terms, an asset puts money on our pocket whenever we're not working. In other words, it's a system or system doing the selling and telling for us while we're sleeping, while we're going about our regular life. It may take some time to put the deal together, to put the system together, to do the selling and telling for us and to sell the product or service that we want to sell to the marketplace. However, we should not include ourselves in the equation or part of the systems to obtain the cash flow. Otherwise, it's not an asset. Remember, an asset will always put money on our pocket whenever we're not working. So a good test to run to figure out whether something is an asset or not is to first look at the way the cash flow is flowing. Is it either flowing into our pocket, into our bank account, or is going out of our bank account every month because we have to pay to somebody or some company? And another good test that we can run is that if we can go to sleep and wake up and have money in our account from that operation. If the answer is yes and it's constantly bringing us money from the work that we did to put the systems together, one time, we spend, let's say, 24 hours or 3 weeks or 1 month or 3 months, whatever it takes to put this operation together. However, the operation is supposed to be built to raise cash flow on its own. So, for example, if we have a home and we live in the house and we have to go to work every day to pay for that house, a lot of times people call that an asset, but it's not. Even though it's their biggest loan that they have, the biggest mortgage, it's not an asset. What determines what an asset is whether that is putting money into our pocket and it's cash flowing into our pocket every single month or every week or whenever it collects the money or generates the income, the passive income. So how do we turn our house into an asset? Well, if we turn it into an Airbnb and we have people coming in and renting the house throughout the whole entire month, and that income produced from those renters exceeds the mortgage amount, and it leaves some for us at the end of paying all the expenses, the taxes, the mortgage, and everything to the bank that we have to pay them every month, then we can say that it's an asset. But onto that is putting money into our pocket, we cannot call it an asset. It has to be putting money into our pocket whenever we're not working. We're not supposed to be part of the equation. Okay, we can oversee the equation, we can improve it and manage it, but we're not supposed to be there working, because the rule number one of Master Investors community, and that's why I created Master Investor Department of Education for financial education, aside from being an investment management company, is to provide high quality financial education made simple, so that we can elevate the financial well-being of all of our partners, including all of our listeners, right? So, which is you. If you're landed here for the first time, our whole purpose of this podcast is that you have more knowledge of financial literacy that will increase your cash flow, your bottom line, because it's based on the true concepts of the very wealthy, of the top 10% of the ones that control the money game, right? And we can either be on the left side of the quadrant or the right side of the quadrant. And we talk about the cash flow quadrant, which is on the left side, we find the employees and the self-employed. On the right side of the quadrant, we find the business owners and the inside investors. And the inside investor is basically someone that knows how to read a financial statement, someone that knows how to put a deal together, how to find and raise money, because the number one job of an entrepreneur is to raise capital. And the number one skill is to sell without selling, basically without being there. We don't need to hard sell anyone, because marketing is all about finding the people that want what we have to offer and putting that message in front of them so that they can grab, buy, and repeat again whenever they need to buy again from us. So basically, when we build a business and when we put a deal together, we're doing it with the purpose of raising capital from the front end, which are the customers, and also the back end, which are the investors. If it's not scalable, if we cannot use leverage, then the investors are not going to be interested in investing into our deal, into our opportunity. So it's important that beforehand we understand that a business and an investment should be built to raise capital. Okay, and we as an entrepreneurs, we have to learn how to spend money without having money. Here at Master Investor, we always say knowledge is the new money. It does not take money to make money, as many people think it does. Money is an idea backed up by confidence. So what is an asset? The simple definition of an asset is something that puts money in our pocket. Many so-called experts on money and accountants will have a much different definition that involves complex mathematics, but the reality is that unless something is putting money in our pocket, it is not an asset. There are many things that can be considered assets. This includes things like investment, real estate, a business, products like books or art, or the dividends from a stock and bond investments. But we must understand that it's supposed to put money into our pocket whenever we're not working. Otherwise, it's a job. Otherwise, is something that we have to be involved, which is not an asset, okay? And there's nothing wrong with being an employee at all, because at the end of the day, we need employees. We need great employees. So we're not knocking on any employees here at Master Investor. We actually appreciate all the employees that do what they love to do. If you love your profession and you love to be an employee, then continue to do so, because you're actually bringing a lot of value to the world. Okay, we cannot have everyone being an entrepreneur or an investor or an inside investor, right? Here at Master Investor, we created a company because it's an investment management company. That's something that I'm very passionate about, and as being an entrepreneur and an inside investor. From investing in real estate and acquiring my own, real estate deals and businesses and doing our own investment to create wealth, we decided to also fulfill the marketplace with the high demand of need of financial education, right? Because it's not taught in school. So we decided to create the department that teaches and demonstrates high quality financial education made simple, so that anyone who is interested in creating financial freedom and becoming an entrepreneur or increasing their assets that they already have, then we can be your partner so that we can make that happen. So the ultra wealthy, we focus on building our assets in our asset column. What is the liability? The simple definition of a liability is something that takes money out of our pocket, which is very opposite of the assets, which is simple. Common liabilities includes things like cars, vacations, clothes, eating out, unused subscriptions, and more. If it's taking money and withdrawing money out of pocket, and like I mentioned earlier in the podcast, if we have a home and we have to live in it, and we do not and we don't have anyone paying that mortgage for us, and we have to pay it ourselves, then it is a liability, right? So we have to understand what is an asset and liability so we can improve our financial well-being. So if we look at the budget of a poor person, we will see that it's full of liabilities and has no assets. The interesting thing is that there are some things that people mistake as assets that are really liabilities, like I just explained. This is because they don't have high quality financial intelligence, and they take at face value the advice of so-called financial experts. It's important that we get the knowledge from the real ultra wealthy mindset, and that's why Master Investor is created, because we want to fulfill that need. We want to be authentic with the rules of money. We don't want to be biased. I'm in the same journey as you are, so there's nothing different. We're not selling a lifestyle or any, it's all about understanding the rules of money and creating your own wealth, being an active investor. You have different passions. You can invest in real estate. You can acquire different businesses. You can do there are different formulas to wealth. But we here at Master Investor, we're going to teach you the proven formulas that we're using, and we're going to teach you and demonstrate you the business principles that work in all economies. Because in order to create wealth, it's not about predicting the market going up or down. Because as a master investor, as an inside investor, we understand that the market goes up and down, and it's all about being prepared for any type of market and being able to cash flow positively and acquire wealth in any type of market. Okay, that's a true master investor, which is an inside investor, someone that knows the difference between an asset and liability, someone that knows how to use good debt, right, and to get out of bad debt, and the difference of the two, because it's not just bad debt. Debt is not always bad. In fact, debt can be very positive if we learn how to manage it, because it can literally leverage us to financial freedom and wealth and riches very quickly. And more after 1971, because that's when President Nixon separated the gold standard from the dollar. And so from that change, the money rules change, and debt became king if we learn how to use it correctly and learn how to make money with it. If we invest if we have a credit card and we invest that money into something that produces cash flow and produces enough to pay for the credit card back and the interest every month, and leaves us with some cash flow on our pocket, then that is good debt. But if we go and grab that same credit card and buy some shoes, or buy something that is taking a card, or buying something that is taking money out of our pocket and it's not putting anything in our pocket, then it's bad debt. So it's a sword that has double corner, as they say, right? Double. It can either make us or it can really kill us, for lack of a better word. So the difference between an asset and liability, to illustrate this, let's look at something most people view as an asset, their home. If you look at traditional balance sheet, your house will be listed in the asset column. For many decades, people always have this understanding that their house, like I explained earlier, is an asset, because they were told by the bank that it was an asset, but it's not. It's the assets. It's the bank's asset, because it's putting money in the bank's pocket. And remember, anything that is on our liability column is in somebody else's asset column. And that's why we can turn a liability into an asset, like I explained earlier. If your house is a liability today because you have to go work for, and you have 3 empty rooms, you can actually turn it into an asset by putting it into an Airbnb and having renters come in and it's staying there during the whole month, which will exceed the amount of mortgage, then that house now becomes an asset on your asset column, and it is also an asset to the bank's uh, asset column, because they're receiving the mortgage every month, so they don't care whether you're making money with it as well. If you were able to create a win-win, then great, because they're happy, they're getting the money, and you're getting also positive cash flow. So even more, the bank will probably give you another loan to get another house, and you can turn that house into a completely Airbnb and move up from there and keep obtaining those freedom units. Because at the end, what do they provide? Assets, freedom. They give us freedom because we don't have to work for money. The rule number one here at Master Investor is that we make money work hard for us. We do not work for money. So we must be able to read financial statements, and it's very simple at the end of the day, because once we do, we can actually start improving our wealth rapidly. The middle class, they have a job or self-employed, right? Like I said earlier, or if you're an employee, you have a job that produces income, and it goes to your liabilities. It goes to the liabilities column to pay for the credit cards or the car loans and the mortgage of the house that you live in. If it's not making money, right, all the liabilities, and it goes out the expense column and out the door. That's how the cash flow pattern of the poor looks like on a financial statement. From the rich, is very simple. If you look at the balance sheet, you'll see the asset column, and we'll have assets on our asset column that is producing income. We don't have a job that produces income. We actually have assets because here at Master Investor, we work to build passive income, which is the income of the ultra wealthy. I'm going to leave the link of the blog that I wrote in regards to this podcast so that you can have it on paper. And I also attach a diagram there that will demonstrate what a financial statement is in simple terms, and you'll be able to tell the difference between a poor's financial statement and the wealthy's financial statement, which I think is so important for you to take a look at it and also read the blog. Leave us a comment in there. And so just remember that the ultra wealthy, we don't work for money in the form of income like employees do. Rather, we invest our money in assets that put more money in our pockets, such as real estate and dividends and intellectual property and businesses that produce positive cash flow. The middle class and the poor work for money and employees and invest their money in liabilities that take money out of their pocket, such as mortgages, consumer loans, and credit card debt, bad debt specifically, right? Because it's taking money out of the pocket every month and they're paying for those interests. There's nothing wrong with having a credit card and actually making that money work hard for us, and we can actually turn that credit card into good debt. We can turn it into an asset because it's putting money into our pocket, and the credit card is being paid off not with our money, not with our sweat and time that we put into obtaining the money, but it's from OPM, other people's money, and OPT, other people's time. The middle class and poor work for money, right? And so remember that. And if we want to become wealthy, then I encourage us to begin investing in our financial education today. And our first assignment is to begin studying the difference between assets and liabilities. By building this foundation, we will understand more about money than the 99% of the world and be on our way to not just getting wealthy and making money, but keeping it too. And that is true wealth. It's not about how much money we make, it's about how much we get to keep and control. So how we're going to begin investing in our financial education today? You can start right now. Go to our website at www.masterinvestor.education and pick one of your digital courses that best fit you so we can help you start building your asset column, whether it's establishing your company, whether it's learning about marketing, whether it's learning about systems, whether it's learning about how to create a PDF, how to do SEO and create unlimited sales while we sleep. We have something there for you. Join our community. And if you just like to read our blogs on a daily basis that we produce for free because we are providing value to the marketplace, because we care about your financial education, okay, and your financial well-being. Here at Master Investor, our mission is quite simple. It's to elevate the financial well-being of all of our partners, bringing you the good and bad news of money, the business principles that work in all economies. I'll see you and I'll talk to you on the next podcast. Leave us a comment. Please share this podcast if you find it valuable. And if you have a question, drop it below in the comments. Thank you for having me.